Hi everyone. So it had been quite some time since I shared my view on the market, so I thought I'll do an update. So it would be a quick video. We'll talk about how the charts are looking like and what can we expect in the coming months, both in the mid caps, in the small caps, even in the large caps, and also what is the accumulation data pointing at. Okay. So first we'll start with Nifty. So if you look at Nifty, it is kind of taking support at that 30 WMA line. So even if we have to draw supports for that, so probably what it has done is it has done a perfect retest of the breakout that happened somewhere in June of 23, right? So that breakout has been retested now, and even it has the support of the 30 WMA line. So looks like it is going to hold this level and kind of reverse from it, looking at how things are moving. So the main thing that was worrying for the market was the bond yields, which kind of touched 5, and the last time it touched 5 was around 2007 levels before the big crash that happened, right? So but now things aren't that bad, and also the US government, right, will not let a crash happen just before the election, right? So what I feel is we might be range bound until that happens, but India, on the contrary, is doing extremely well. If you look at the economic growth and whatever indicators we have, right, for the economy, all are pointing at very strong growth that is happening, and that is what is keeping our markets afloat. So we haven't really corrected, right? We are hardly like 5% from the highs that we touched, and also the global liquidity is still quite high. So what happens when global liquidity is still quite high? Whenever there is a dip, there is more money coming in to buy these assets. So that is what is happening. So Nifty looks like it has made a bottom and it is kind of trying to reverse from these levels. Now coming to the mid cap, so this thing. So mid cap, it had a pretty big fall. So if I have to kind of analyze it, I'll just remove the drawings. So here, so this, where it had halted last time for like 2 weeks, this is a weekly chart, then it has now come back to that level and again trying to move back up. So net you can say that the mid cap index is probably trading around this level for some time now. It is going to be there, I feel, for the coming few months. Usually what happens when a big move has to happen, it is the Nifty that kind of climbs up first, then becomes like a little expensive, then money starts flowing into mid caps. Okay, and mid caps start becoming a little expensive, then it starts flowing into small caps. So this is the usual trend that happens most of the times in the market, right? So even the mid cap index seems to be largely in a range as of now. So the upper range is at 41,260 and the lower one is somewhere at 31,800. So a good, you can say, a 10% range it has been moving in, right? So if it breaks on either side, that is when you can say that okay, this consolidation is over and then we are moving into another territory, maybe go up like 10, 20, whatever percent, and then again consolidate there. So same even with the small cap index. So the small cap index, the 12,000 mark, which was pending, right? The breakout at 12,000 was pending. That happened in August, right? This breakout happened. So that is finally complete. And we had like a huge move. So after touching 12,000 levels, it actually ended the week at 12,600. So that is a good 5% recovery from the lows it touched, right? So today, although we opened higher, we kind of closed a little lower, or let's say although we are in the green, but we opened higher and cooled off a little. Okay, so this is what is happening in small caps. So in small caps, if you ask me, I would say that any closing above this particular level, right, would be like a trigger point to say that okay, maybe there is pain. If it kind of, let's say, closes on a weekly below this, probably we can come back to retest the 30 WMA line, or else it should be in this range. Okay, now looking at the data. So what is the data telling us? So if you look at it, the data also has been kind of in a sideways. So the peaks that you see here was those days when there was some kind of a reject, but if you eliminate that, then you can clearly see like the recent dip that happened. So in that, the data, I mean the accumulation kind of spiked, right? And although on Friday it kind of cooled off. So on Friday when we moved up like 2% on the small cap index, it kind of cooled off. So nothing really to worry. What is happening is sector rotation is happening. So the most of the mutual funds who have bought the stocks, they are holding on to them. They are not really selling and getting out. Okay, and they are getting additional money every single month via SIPs, which they have to deploy in the market. As of now, looks like they are deploying that in the large caps, but eventually that is going to spill over into mid and small caps. And this range is going to hold, I feel, because if there is more panic, what will happen, you might start seeing retail panicking and even exiting the market, which usually these domestic guys won't let that happen, because they also lose on business, right? Lose out on business. So as of now, my prediction, or let's say my analysis, says that we are going to be range bound for the mid and small caps, wherein specific stock specific action will continue to happen, right? So even in the fall, something like, let's say, Credit Access Grameen has been in that same range, or let's say it has moved up 10, 15, 20% in the last 10 days, whereas other stocks have gone down. Something like a Fusion Micro, which went down, and again it is like up a good 10-12% from the lows that it touched and from where it reversed. So there are stocks, you look at ICIL, Indocount, right? The textile theme. So that stock has also gone up like, let's say, 20%, 20 odd percent in the last 15-20 days. So it is a very stock specific market. Instead of blindly buying anything and everything, right, you have to do a little analysis. And usually wherever the big guys are pushing in money, right, wherever the accumulation is good, those stocks will tend to do well, and even the results that have come in are very good. So there is no reason for a dip to maybe probably in December, if things turn ugly, we can go down, but as of now, nothing to be really worried about. Even the data is okay, no real red flag. Hope this helps. Thank you.